Hello and welcome to Markets Today. I'm Lata Venkatesh and joining me from Delhi News Centre is Surabhi Upadhyay. Well, it was yet another day when the Bulls did not quite get defeated by the Bears. The markets ended slightly in the red. It was the sixth straight day and one saw a lot of pressure on the public sector banks, but really it looked very typically like the day before the expiry of a major contract. So all the fireworks, whether it's on the cricket field or on the trading rings, are reserved for tomorrow. Hi, Surabhi.
Hi, Lata. I wonder if the match or the expiry, if either of those two events can break this losing streak for us. But lots to talk about over the next half an hour. Let's start with the headlines. A sixth straight day of losses on Dalal Street. Benchmark indices trade lackluster, finally ending lower by 0.2%. The Nifty closes at 8530. The Sensex loses 50 points as well. Auto and pharma stocks find some buyers, but PSU, bank and capital goods stocks end weak.
Pharma stocks in focus today. Sun Pharma finally completes its merger with Ranbaxy. Glenmark receives a breather after the Supreme Court stays the Delhi High Court's order on sale of anti-diabetic drugs. It was a ban on anti-diabetic drugs. Ipca Labs bucks the trend of positivity in the pharma stocks. It tumbles 14% after receiving an import alert from the US drug authorities.
Mid-caps fare slightly better than blue chips, with the mid-cap index managing to end marginally positive. Hindustan Construction gains 2% on winning an arbitration case pertaining to time overruns in a project in UP. Trader favorites like Suzlon, LIC Housing Finance and GVK Power, however, end weak.
And it's the third largest rights issue to hit the market in recent times. Tata Motors looks to raise over 7,500 crore rupees by offering shareholders 6 shares for every 109 that they hold through a rights issue. Ordinary shares are priced at 450 rupees a piece, while the DVR shares can be bought at 271 rupees a piece. Well, those were some of the headlines from the markets, and here are the experts that we have lined up on the show today. Pramod Gubbi of Ambit Capital will give us his take on the state of the markets, the near term and the medium term. Nitin Jain of Kotak UK will also join in with his sectoral picks as well. And we will get you the managements of Sun Pharma to talk about their big merger with Ranbaxy.
But before we get to all of that, let's start with the trading highlights of the day. Another day of consolidation on Dalal Street. The Nifty and the Sensex traded in a pretty tight band throughout the session, finally closing with a negative bias. Anuj Singhal is now joining in to give us the details of the day's trading action. Anuj, over to you.
Well, a listless day for the market today, considering that it was the penultimate day of a series and the market had very low volumes. In fact, the volumes today were lower than the first day of a series. So, the cash market volumes, that is. So, clearly the conviction is missing right now, not just from the bulls, but even from the bears. The Nifty today successfully defended 8,500, but closed below the 100-day moving average. So, really, it could tomorrow break down or break out on short covering on expiry day. Either is possible, but the bets would be more on the way down than on way up. IT and Pharma managed to do well relatively again, as the focus is clearly now back to IT and the exporter sectors and some of the defensive sectors. But the stocks that led the market down included L&T, HDFC, TCS, the PSU banks. They continue to be a bit of a problem point for the market. On the gaining side, ICICI Bank saw some short covering today, and that was the sole reason the market defended 8,500 in trade today. So really, tomorrow is expiry, and tomorrow is the India-Australia match as well. So it's bound to be some kind of fireworks on both counts.
Okay, that it will be for sure. Anuj, thanks a lot for joining us. Well, just a word on the manner in which the markets moved. Early morning, we didn't see the bank Nifty doing so badly. And then towards the end, we saw a distinct divergence in the bank Nifty itself. The public sector banks took a knock, while the ICICIs and the Federals and the Axis stood out. So clearly a little bit of preference for a private sector, which made the bank Nifty as a whole not a serious underperformer. It was not the big factor bringing down the Nifty itself or weighing on the Nifty, but public sector as a lot was not doing too well. We saw a lot of weakness in the NTPCs, the GAILs, the NMDCs, as well as the public sector banks. So today was not a great day for public sector as a unit. But of course, it was a lot of random moves, largely trader favorites getting a knock.
Okay, on that note, let's get you some market opinion now. Pramod Gubi of Ambit Capital has a Sensex target of 34,000 by 2015 end. He recommends investors to add quality stocks on corrections.
At the market level, I think we may already be looking at closer to the bottom. But if you look at this correction, it's been largely restricted to some of the large caps, the index names, and some cyclical names. You might see some correction in those names that have held up. Which may not reflect entirely at the index level. But that'll be an interesting standpoint, whether this quarter or the next quarter's results, which will crack open some of these highly valued stocks. That'll be an interesting time to look at these names, and that's what we're recommending investors to do. Hang on for right now and wait for that correction and then start adding to those quality names. Don't think you'll see a de-rating in the Sensex PE multiple. So that would mean that we're still looking at a year-end target of about 34,000, which uses a 20 times multiple. So maybe the first 6 months will be tough, but the second half of FY16 should see a reasonable pullback or a rally, taking us closer to 34,000 on the Sensex, which means on the Nifty, I don't think you'll see anything below 8,200, at least based on what we see currently. I think the sort of demand destruction we've seen will take a while for it to percolate. Q2 maybe, but I would rather bet on second half of FY16 rather than the first half.
Okay, so the good times are a distance away, whether it is earnings growth or whether it is the Sensex going to 34,000. That's the word from Pramod Gubi of Ambit. But actually, I'm glad that Anuj stayed back. Anuj, we want all the action from the futures and options space from you.
Well, penultimate day of the series, and the options data was quite incredible actually today's trade. The sense that you're getting is that the market now has a firm peak at 8,600, 8,550, all these calls for adding open interest, and really it's the battle for 8,500 now. 8,500 put was very active, 8,450 put was also very active, so both these puts saw quite a bit of build up in trade today, and that would be the levels to watch out for. The rollovers have been quite low for Nifty and the Bank Nifty, indicating that even the shorts are booking profits now and not really rolling over their positions after the kind of losses that we have seen. In terms of individual stocks, really watch out for 3 or 4 stocks. First on the block would be Wockhardt and Sun Pharma and Lupin, few of the stocks that have gained the most this series. And you could add stocks like Idea and Bharti as well, among the biggest gainers. On the losing side, of course, watch out for metal stocks if there could be some more downside in some of these names.
All right, Anuj, thanks so much for that. Let's now move to the big story coming in from the pharma space today. Almost a year after it was first announced, the merger between Sun Pharmaceuticals and rival Ranbaxy is now complete. Ekta Batra, who has been tracking that story, is joining in with all the details. Ekta, break down this big deal for us.
Well, a couple of takeaways from the press conference that I attended for Sun Pharma and Ranbaxy, which was basically to announce the finalization of the merger and the start of the integration process between the two companies, included first concentrating on the P&L. The consolidated revenues would stand at around $4.5 billion on a pro forma basis on a 12-month ending December 2014. The EBITDA margin for the consolidated entity was at around 32% versus an industry average of around 19%. Remember, this is below what Sun Pharma used to usually do on a standalone basis, but was expected by the street. The cash ex of Ranbaxy's debt of around $1 billion stands at around $1 billion for the consolidated entity. So Sun Pharma continues to be a net cash company, and the merged entity will see synergies of around $250 million in the next 3 years. The management said that they will scale up R&D investments, so currently stands at $250 million for each company, will scale it up to $300 million and eventually look at even $500 million. They said that they will look to work on providing confidence to regulators when it comes to US FTA issues and will explore options if it comes to, say, divesting certain assets if that is the requirement at that point in time. Talking about the Halol facility in particular, the management said that it is positive that they have received an approval to manufacture a Spark drug, but they cannot extrapolate that at this point in time, and they are in regular contact with the US FDA. On acquisitions, Mr. Sanghvi said that the Ranbaxy acquisition does not preclude the company from doing other large acquisitions at this point in time. We'll get a closer look from what the Sun Pharma Ranbaxy merger and consolidated entity will look like in Q4 itself, considering that they will be coming out with consolidated numbers.
Oh, that's interesting, Ekta. But do stay on with us. We'll want to play a clip of what the managing director of Sun Pharma, Dilip Sanghvi, told Ekta about his major focus. Let's hear him out.
As a company, I think our most important focus will be to win the confidence of regulators. As you are aware, Ranbaxy had certain problems in some of the manufacturing facilities, and because of the loss of confidence and the trust of the regulator, these facilities are under consent decree. We are committed to ensure that we will do whatever it takes to win back the confidence of the regulators.
Okay, that's the commitment from a big man who has proved his mettle. But coming back to Ekta, the other pharma company that was in focus today was Ipca Labs. As you know, for all the wrong reasons, the stock ended about 14% lower on the back of news that the US FDA has issued an alert notice against the company's Pitampura and Silvassa plants. Tell us about it all.
Well, all wasn't well for the pharmaceutical space. It was Ipca Labs which was under tremendous pressure, in fact down 13 to 14 odd %, reacting to the company receiving an import alert for its Pitampura as well as Silvassa unit. Remember that with this, all of the US FDA approved facilities are under import alert for Ipca Laboratories. The Indore facility in particular had already received a US FDA observation in 2014. This is when it had reacted negatively to that news. And remember that the Ratlam facility had already received an imported alert in January 2015. So post the observations that was received for the Indore facility, the street was fearing the fact that it could possibly convert into an import alert. Besides that, Silvassa unit, which is the second largest after the Ratlam unit for the US markets, also got an import alert. However, the US FDA, we do understand, has exempted 2 products of manufacture in Silvassa, so that is a little bit of a positive. The management in a conference call today said that they are taking corrective actions. The second import alert is an effect of the first Ratlam unit observation, and they expect the plants to be internally compliant before December 2015. Let's listen in to the management themselves.
Whatever the corrective actions which we are to take, and on an appropriate date, we will be talking to FDA in consultation with our consultants. So once they give the clearance, now we are prepared to talk the issues which they have addressed and we have identified and addressed at our level. And till that time, we don't find any other move on this issue. So question of consent degree does not come at this stage.
All right, let's move on from pharmaceuticals to telecom. Telecom stocks will be in focus tomorrow with the spectrum auctions finally drawing to a close after 19 days of bidding. The government has garnered over 1 lakh crore rupees from these auctions. Let's now find out what analysts are making of the developments and how the stocks might react.
I would expect the mainstream telcos have largely retained at least the minimum spectrum in their renewal circles. I expect, based on whatever information has been disclosed in the last 3 weeks by DOT, that Bharti would have increased its spectrum holdings in a few circles. And I would expect that Idea has at least managed to get the minimum of 5 megahertz assured for itself. It's come at a steep price.
All right, we will get to know all those details hopefully by tomorrow. Shifting gears to Motown now, Tata Motors is among the top nifty gainers today. This after the board gave approval for a 7,500 crore rupees rights issue to fund its ongoing and future capex plans. The shares will be issued at a price of rupees 450 per share and rupees 271 per DVR share.
All right, so that's news coming in on Tata Motors. Moving on, time for a quick break. But coming up next, Sudarshan Sukhani would be joining in for a technical chat. We'll also tell you about all the other stocks that have been in news today.